Hello and welcome to this listening podcast number 14 with me, Paul Olliff, Legal Director at Ashfords. Today we'll be talking to Matt Oakley, Head of Commercial Research at Savills. I've spoken to Matt a couple of times over the years and he has over 30 years of experience in the sector, so I think it's fair to say he knows his onions, and it's great to be listening to you again, Matt, and thank you for joining us.
Well, thanks for having me back, Paul.
So today we're going to be talking about the effect of COVID on the commercial, retail and office space in cities around the UK. It goes without saying, COVID has had a pretty devastating impact, particularly on the retail market across all areas of that sector. Sadly, we've seen many names leave the marketplace and the high street altogether, and with that they leave vacant premises in prime locations. Matt, what effect has this had on the high street and where do you see it going? What I'm thinking about that is, for example, will we start to see landlords and owners using those premises which are now vacant for, say, permitted development rights, changing to residential use, or are they trying to fill them with more retail clients?
Well, funnily enough, Paul, I think retail has had a comparatively good COVID in the sense that it was going through the structural change before. A lot of the pain and retailer failures, as you know, took place before COVID even became a word that we recognised. Various sort of governmental measures have kept, I think, some retailers afloat who otherwise would have gone by the wayside. But undeniably, things are still tough out there. And if you look at the sort of, the larger units, the department stores that were already failing, it definitely is going to be proving to be very difficult to let them. The one ray of sunlight, perhaps, is around human behaviour. And over the last 18 months, we've all kind of got used to the areas in which we live a bit more. We've spent time there during the working week, whereas perhaps we might have schlepped into the city centre every single day. We've rediscovered the sort of local artisan whatevers, and actually trade on sort of suburban high streets has been remarkably good, coming out of both lockdowns and actually through some of the lockdowns. And as we've all returned to sort of going out and having fun, we've actually started to see some of those voids fill up, not necessarily by multiple retailers and restaurant operators, but I'm a slight optimist about this. I think actually changing consumer behaviour and the working from home thing could be good medium term for some high streets.
Well, firstly, I'll eat my words, so it's not as bad as I thought it had been. But that's interesting. Picking up on something you said there, you said some government measures has actually sustained some retailers. So what were those measures? How did they help?
Well, I think the furloughing, was very good for the British economy generally, and the fact that retailers didn't have to sort of, pay their full staff bill kept them afloat through, obviously it was a very difficult time. We also have to remember that not all retailers had to close, and if you look at, what is probably the hottest part of the retail investment market at the moment, retail warehousing, a significant proportion of the retailers were classified as essential, so they stayed open through the crisis and consequently are in a comparatively good position. I think most of the problems that are still lurking out there on Britain's high street are probably problems that were with us pre-COVID. They relate more to the rise of internet shopping than they do anything to do with sort of, virus-related behaviour or otherwise, because footfall is back to normal in many locations other than perhaps in the middle of the biggest cities, and actually better than normal in some locations.
Oh, right. Well, that's interesting. I wasn't aware that actually there's quite a positive take on it. Another impact of COVID has been employees working from home. I know that Savills, you've been more flexible with working from home, and we at Ashford certainly are as well post-lockdown. During lockdown, obviously, working from home was enforced, but since it's been lifted, it was a generic relaxation on attending the office. Now, this potentially has big impacts on the office market within cities because companies are becoming aware that people are preferring to work from home. People don't need to come into the office to do as well in their, or be as efficient in their jobs as when they are in the office. And also companies have big overheads of rents with space which potentially they don't need. So my question to you is, Matt, what impact is that new ethos of relaxation for working from home rather than the office having on cities' office space?
Well, that's a huge topic, Paul. Where start? Let's start with what actually is going on. As of the end of last week, approximately 20% of people who normally work in offices were in their offices around the UK, and there isn't a massive difference actually between London and some of the regional cities. I don't think the home working, agile working genie is going to go back into the bottle, and I think actually too many companies were resistant to it in the past for a variety of possibly unreasonable reasons. I think in a world where we are paying more attention to people's health and wellness and family lives or just personal lives and their productivity, enabling people to work and decide where they work best is a very good one. However, your and my clients are predominantly landlords or investors or developers of large office buildings. And this is a concern because I think, the tenants are saying, we don't know how much office space we need. We know we need some new offices because the older ones aren't very nice. And, we want to build in green and we want to build in all the social stuff. But we don't know whether we need 50,000 square feet, 100,000 square feet or 125,000 square feet. So at the moment, what we're seeing is tenants, if they can, just delaying making decisions. And leasing activity really has shown little or no sign of picking up this year. The demand is out there, and the level of demand, if you just look at London, is higher than it was in the market prior to the crisis, led very heavily by the big American lawyers in particular in London who are all expanding. But what we're seeing is a big spread in the sort of put and pull option when they come to doing a pre-lease and saying, well, look, maybe we need 50,000 square feet, maybe we need 150. We can't commit now. And I think until that 20% occupancy figure either rises and settles or indeed settles at 20%, we're going to see a big degree of lag and inertia in the market, which is very difficult if you are the investor or developer. The other trend, I guess, and this is again tied into both the E and the S of ESG, is where companies are down moving and where they may be downsizing because they just don't need so much space. They're not downsizing in terms of quality. So around 90% of all the office leasing deals this year in London have been on grade A space. So I'm saving a bit of money by taking a bit less space. I'm going to spend that money on taking better space. What people are putting into their buildings now to try and seduce their staff back to work is astonishing. I have a client not more than a mile from here who is putting a pet creche into their building because so many of their staff got pets during lockdown.
Wow. I mean, it doesn't surprise me. You did hear about all the animals. You say seduce the employees to come back. That's a positive thing to me. I mean, office spaces being a bit more friendly is a good thing. But what you were just saying was quite interesting. So there hasn't been a dramatic number of people terminating their leases early or opting to share space. You're saying, if anything, the pre-lets are becoming a bit more interesting with pull and puts, as you said. But overall, it doesn't look as though the impact is that dramatic, as in companies just leaving.
No, and I think, we saw a lot of the normal recessionary trends. So, obviously the volume of leasing activity went down, the amount of vacant space went up during the crisis, the amount of sublet activity doubled. So companies saying, we have this floor we don't think we need, let's put it on the market for 5 years. It's not really the landlord's problem. So all of those things have happened. We're seeing that change as sort of corporate psyches swing from headcount cuts, which was probably where they were this time last year, to headcount growth, which is where they are now. And I think, when we're looking at the whole concept of the return to work, we're balancing out employment growth in most cities. And I think, most of your clients and my clients, I suspect, are planning on increasing in size. You then take away the impact of agile working. So let's assume everyone is going to do 1 day a week more than they did in the past at home. And you add back in a bit more space per capita. Because again, I think something we talked about on previous podcasts actually was how bad the open plan office was getting for staff. The noise, the smell of being packed in. And I think, again, what we're seeing with our clients who we're working with now is let's just give our staff a bit more space each. And whether that is in terms of video conferencing suites or social spaces or whatever, but the office rent bill is not particularly significant for most companies. It's about 15% of their total costs. The staff bill is huge. So if you can make those staff a teeny tiny bit happier, it's probably worth spending a few quid on. And I think then we get to why aren't people coming to work? And I think it's not because they hate the office, it's because they hate the commute. So, where we're seeing sort of client money adjusting royalties, the best buildings are going to be great buildings on transport nodes. People hate the commute. They're not frightened about catching COVID on the tube anymore, but they're quite happy to come in on Friday night and go out. All the data says people are going out at relatively normal levels. So there are definitely changes there, and I think we are going to see a widening gap between the best buildings and the worst buildings. And the worst buildings, they may be stranded for design reasons, or they may be stranded because of environmental reasons. Someone will come along and buy those one day and turn them into great buildings, or we're left with the same repurposing question you asked about retail, and what you do with a redundant office building is probably much the same question as what you do with a redundant retail. It'll probably go for residential.
Now, if we just sort of tie both of those factors together, not as big impacts as perhaps thought, and I think a lot of people thought there were on the retail and the office space in city centres. But my next question was going to be, what's been the overall impact on city centres, and where do you see it going? But from what you've just said, it doesn't actually sound, correct me if I'm wrong, that there will be a dramatic shift in what we currently have, but let me know what you think.
I think different cities are going to have different impacts. The really, really big world cities that are particularly in the Western world, that are very dependent on public transport, will recover last. They also tend to be cities that are very dependent on tourism flows for supporting their retail and leisure infrastructure. And it's going to be some time before international tourism returns to its level. So I think if you're looking at the UK, London normally recovers first out of a recession. I suspect it's going to recover last because we're not going to see those tourists coming back. The office workers are not coming back to the same degree or the same speed. So I think you are a retailer or a leisure operator in London, the outlook is probably more challenging. If you look at somewhere like Manchester, restaurant reservations bounce back to 20% above normal levels almost immediately after the end of lockdown too. So I think because that is predominantly a local community, the downside risk is less significant. I think another factor, and this might be the government's get out of jail free card on levelling up, is if we are moving to a world where you don't need to be in your company headquarters 5 days a week, maybe we'll see more growth in the region. That classic sort of graduate who lives in outside London, went to university outside London, normally would have migrated to London for their first job. If they don't need to be in your office 5 days a week as part of the graduate program, and they're coming down for 2 or 3, they're staying north, maybe that money they're injecting into the local economy could be a boost. So I am more of a fan probably on the regional cities as a defensive play against some of these changes than I am against London. London will come back for sure. It's just going to be slower, and we're seeing very similar stories in Paris and Manhattan. The bigger the city, the slower the return.
Yeah, and that's interesting. But overall, it's far more positive than people perhaps thought. Is what I'm taking from all of that. Matt, I found that really interesting as always. Thank you ever so much for opining for us. It's been great listening to you. I hope you've enjoyed it.
I have indeed. It's always a pleasure.
Thank you, Matt. You've been listening to Matt Oakley, Head of Commercial Research at Savills, and Paul Olliff, Legal Director at Ashfords. If you have any questions or would like to comment on the podcast, then please leave a message below or contact me at p.olliff@ashfords.co.uk. Thank you for listening.